In 2018, Uber bought some rental bikes in New York for $180 million, and this turned out as well as you thought. Even the cash burning machine that Uber was at the time couldn't stomach holding on to it. So, less than 2 years later, they sold it to Lime for 30% of their company. Lime's revenue grows at 29% annually, and their profits are at about 8%, giving it a PE ratio of 26 if they were to go public today at $2 billion. But how were they able to turn ass into gold? They didn't. I actually lied, they don't make money. The main purpose of their IPO, as stated in the prospectus, is to cover the $850 million in convertible debt that they have coming due this year. Convertible debt basically means that instead of being paid back in cash, a loan is paid back in stock, and that stock is created out of thin air. For example, if at IPO you buy 10 shares and there's 100 shares, you own 10% of the company. But in this case, Lime is creating 32 new shares later in 2026 to cover the debt it took on, shrinking you down to 7.5% and then down to 6.8% a couple months later. All this while also being $100 million in debt and having that debt at an interest rate of 10%. These numbers from the beginning are actually where they would be at if they were able to cover their convertible debt while servicing their non-convertible $100 million. At a PE ratio of 26 and a growth rate of 29%, which is just a hell of a number, their plan to keep growth going is to expand south where winters aren't so brutal like in New York or San Francisco, where they're going to have to worry about less riders and storing their bicycles, upgrading those bikes and scooters so that it only takes about a year for them to pay themselves off, and then every day after that is $4 in profit. And then also just lobbying local governments to lock in legal monopolies, just normal business things. I honestly just can't get over the debt. Expansion entails spending money, and they don't have money. They have a lot of debt, and they're gonna have more debt if they do want to do expansion. Expansion south is just a whole nother can of worms. And the whole lobbying the governments thing isn't even a locked in thing. Like, they lost their contract in Denver recently. And call me dumb, let's compare them to Uber. Oh, what a convenient example. Uber grew at 18% and had a net margin of 20%, and yet they still only traded at a PE ratio of 17 in 2025. And that's because Uber isn't a tech company anymore. According to the market, it's transportation. And Lime's current valuation worries me a little bit because it's being valued as a tech company, when in reality, it's an asset-heavy business model that doesn't scale easily. It has a lot of debt, and it has a lot of bikes. If I had to call this IPO, I would just say wait a couple earnings calls, wait to see how the market prices in these convertible bonds. If after the second earnings call, everything looks pretty good, which I wouldn't be opposed to that either. Or dollar cost average. I would just like to see the elephant clear the room before I make any moves. Subscribe and that.